Hey, what's up everyone? So I'm trying something new here. I created the video, it's going to be following right after this, which is some educational content. So I'm looking into doing some more of these, at least on a weekly basis. I would love to know, what do you think? Do you enjoy it? Are there certain things you want to learn about more? So please leave me a comment down below, let me know what you think. But other than that, I hope you enjoy this and I hope to be doing a lot more. Talk to you soon. All right, everybody, welcome. Today I'm going to be talking about 5 tips for conducting a homeowner's insurance checkup. Okay, this is super important. So I really hope you enjoy this and that you pay attention. Definitely get a pen and paper if you haven't yet. I'm going to give you some actionable tips so that you can make sure you're doing this correctly. Okay, so what we're going to talk about today is, first of all, when was the last time you evaluated your homeowner's insurance? You should be doing this at least annually, if not every couple years. Anytime you make major changes to your home or buy something expensive, you want to make sure you're updating your coverage or at least evaluating it to make sure that you have enough to cover all your possessions. With the recent fires in Northern and Southern California, this is a great reminder to do a checkup on our homeowners policies. You don't want to do it after your house is burned down. You want to do this before, okay? It would be completely terrible to suffer a tragedy like a home burning down or water damage and then come to find out you don't have enough coverage. So this is really important, and I'm going to help you out with the best I can today to get you started on doing this the right way. So, question for you, have your needs changed since you originally purchased your policy? If you purchased it many years ago, you could pretty much say yes, your needs have changed. But if you've made improvements or acquired valuable possessions, okay, those two things, you want to make sure that you're updating your policy every time you make any home improvements or acquiring any valuable possessions. That's very important. Because if you have, there's a good chance there are gaps in your homeowner's coverage that may not cover all your possessions or your home from the original policy to what you have now. So today we're going to cover some tips to help you keep your coverage up to date. So I hope you enjoy them. There's going to be 5 tips today. And tip number 1 is be familiar with your homeowner's policy. So you want to read your policy's provisions, the limits, the exclusions, and if there's anything that seems out of order, you definitely want to contact your insurance professional, whoever you bought that policy from, and ask them any questions and make sure that you that you keep enough coverage for yourself. If that's the case, you want to set up a meeting to analyze any potential homeowner risks that may be applicable to your particular situation. So that's very important stuff, making sure that you have all risks taken care of in your situation. Tip number 2 is to regularly assess your cost to rebuild. Okay, if you had to rebuild your home and replace all of its contents, would you have enough insurance to cover the rebuilding and replacement costs? You know, in high cost housing states like California and New York, I mean, there's a good chance that your coverage may not be sufficient if you bought it 10 years ago because your home probably went up in value since the last market crash. So you want to make sure that you have enough coverage to replace your home and the contents inside. You want to make sure that you're regularly assessing your cost to rebuild, including your personal possessions, so that you can adjust your insurance coverage for appreciation, rising construction costs, and home improvements. Rising construction costs, even if your house hasn't gone up a lot in value, that could be something that may put you outside of the range of coverage if that's the case and you bought your home a while ago. So keep that in mind. Number 3 is to check your community building codes. Sometimes a damaged home can't be reconstructed exactly as it was without violating current building codes. So for instance, the home may need electrical rewiring or special windows due to updated safety or energy codes. You know, these things change over time, and if you're not up to date with those, it may be a higher cost than you were originally expecting. So keep these things checked as well when you're doing your insurance review. And you want to know about these potential expenses in advance so it gives you the time necessary to obtain the insurance protection that you need. Tip number 4, keep an updated home inventory. Okay, this is so easy to do, but most people don't do it. Simple thing to do is just walk around your house, get your cell phone, videotape all your possessions. Open up the drawers, open up your closet, get videotape coverage of everything that you own, because the first thing you're probably going to grab is your cell phone, so at least you'll have that with you. You should definitely upload that to the cloud somewhere, whether it's in Google Drive, whether you have iCloud, if you have Apple, somewhere, Google Photos, it's free. but upload that video somewhere to the cloud. So if anything were to happen to your phone, that would be able to be replaced as well, and you'd have it all there safe, okay? So you want to do this yearly. So I think the best thing to do is once you actually do this recording, then set a reminder. Tell your phone, whether you have Siri or Google Assistant or whoever it is, say, remind me in 1 year to update my home inventory and record everything. Just set that in there, or say you can say, remind me every year to do that. Then that's in your calendar settings forever. That's a great way to go about it. I do that with all kinds of stuff when it comes to reminding me things I need to do. And as I mentioned, you want to be sure to store extra copies in a safe place outside your home. So if you like the more traditional way of taking pictures or whatever it may be, you can get a safety deposit box at the bank, keep it in there. But doing things and keep it in the cloud is probably one of the safest places you can have now with all the backups that they do. So keep that handy at all times. And number 5 is to evaluate your liability exposure. So the simple question is, does your homeowner's policy offer enough liability coverage for your needs? That's a big question. If not, a personal umbrella policy may be a worthwhile consideration. Umbrella policies are essentially what they sound like. You have your main property and casualty coverage in place. That's typically through your auto insurance company. You'll have $300,000, for example, as an average coverage. That's actually a little bit high for most people, more than what they have, I should say. It's actually low for what you need, but it's more than what they usually have. But say something happened and someone sued you for over $300,000, or your home is worth over $300,000. Well, then this umbrella coverage would come into place. Umbrella policies are one of the best deals in insurance. You could get them $1 million in coverage for as low as $140, $180 a year. I've seen them for $350 to $550 a year as well. But again, it could be somewhere between $15 to $30 a month to get $1 million of coverage. Okay, so it's really, really important. In California or high-cost states, you may want to look at least $1 million, if not $3 million of coverage. The cost is very, very minimal as far as the difference. But if your home alone is worth $1 million, imagine if you had anything above that, you need to be protected. So they do come in increments of $1 million, and make sure that you get that quote for $1 to $3 million, up to $5 million if you do have a lot of assets, which puts you at a higher risk for lawsuit exposure. Okay. So those are my 5 tips, and here's some parting thoughts for you. A homeowner's insurance policy can help you protect you and your family from experiencing devastating financial loss as a result of damage to your property. If your home suffers from a flood, a landslide because it's on a mountain somewhere or whatever it may be, or a fire, you have enough to deal with already with the stress of just dealing with that life situation. Keeping the right policies in place will help you sleep at night and help you realize that you're going to be okay. No matter what, just focus on you and your family and your property. Leave it there. Get out of the house, and everything else will be okay. It offers you protection against expenses you otherwise might not be able to afford. Most people can't just get $500,000 or $600,000 in cash to rebuild their house if something were to happen. That's why it's important to keep your coverage up to date. You want to keep your policy current and sufficient to cover home improvements or the acquisition of high-value possessions. Failure to maintain proper coverage may result in you sharing a greater portion of a loss than you expected. What does that mean? If your coverage only goes up to $500,000 and you have a $700,000 loss, that means you're going to be sharing in that loss with you covering the other $200,000 that is not covered by your current policy. And although insurance originated over 3,000 years ago, it has definitely evolved throughout the centuries to keep pace with society's needs. So you want to conduct a regular review of your homeowner's insurance coverage to ensure that it evolves to keep pace with your needs. If you have further questions or feedback, here's a couple ways to get in touch with me. If you're looking for help regarding anything around your finances, retirement planning, the best thing to do is to go to kisplanning.com/apply. That way you can book a session directly with me, and I will help you for about 45 minutes for free, really get clarity on your situation and help you figure out what your next steps should be. If you want to just email me, you can email me at jason@kisplanning.com. That's a great way to get a hold of me. Or you can just go to my website at kisplanning.com to get access to our most recent retirement webinar and also more free resources. Okay, and you can also get in touch with me there as well. If you have any other questions, leave it in the comments down below. We'd love to hear from you. We'd love to hear your feedback. We're always open to that. So Other than that, hopefully these tips helped you out. Have a great day and stay safe when it comes to the crazy stuff going on out there with fires and all this other stuff, okay? Stay safe, and if you need anything, let me know. I'm here for you. Have a great day. Bye-bye.